So happy to have you here to see some new faces and some faces that I have already seen. Thank you very much for coming here tonight. No, it's tonight for me, but I think it's not tonight for you. Most people I see here are from the United States and Canada, probably. Okay, let's wait for 30 seconds for the latecomers. And then I will start talking about becoming a unicorn mentor. Could anybody tell me, why are you here? What's your expectation from this? Why did you come here?
This is Chris. This is Chris from California. We're building a unicorn company in the water space, and I also mentor and work with a number of startups who want to be either a unicorn or a small goat that's growing a horn. So that's why I'm here, to learn more about what you're up to and how that might enhance my abilities.
That's great. Thank you so much. Anyone else? Just waiting for the latecomers.
This is Carter John. I'm from California, San Francisco Bay Area. My background is engineer, but I'm an entrepreneur all the way. I was running multiple businesses. So right now I'm researching an idea of building a platform to provide mentorship for early stage startups. So want to help them to many more people become entrepreneurs. That's but I want to learn how to mentor people. Yeah,
that's great. Thank you so much. Okay, I think we can start now. Let me check. Yes, this works. I will start with a simple case study, with a short case study. Those two guys, founders, they came to me, it was a few years ago, 2020, 2021, don't remember. It was November. Somebody told them that I'm the guy who can help them test hypotheses. We need to test hypotheses. They knew that in order to grow, they need to test hypotheses. Please tell us how to test hypotheses. And so we had a 2-hour call or 1-hour call, I don't remember. And we formed some hypotheses. And then the consultants, mentors, nightmare, they had enough of it. We understood it. We know what to do next. Thank you very much. We are going on our own. It was November. A month later, in December, they came back with, we did nothing, because they were stuck in routine. What I do to founders, what I help founders to do, is to find the main limitation that doesn't allow them to grow and quickly overcome this main limitation. In this case, this limitation was quite obvious. It was the routine. They weren't able to do what they planned to do because of the routine. So fortunately, they had everything in place to get the founder out of the routine. They had chief operating officer almost ready to take care of that. And so their first week was to delegate. They worked on delegating the routine, and a week later they came back and the founder told me, we did that, it's delegated, people are working on the hypotheses we formed a month ago. What do I do next? Should I watch cartoons? For the next several years, this guy never watched any cartoon, because the next thing we did, we started working on where does he want to get. This was not a very small, not a big, but not a very small business, $5 or $10 million in revenue. And I asked, what is his goal for the next year? It was in December. And his goal was to grow 50%. For me, growing 50% a year is not a very ambitious goal at this stage in the business. So we started to look around what's possible on their market. And we found a few companies, a couple of companies, the American market, this was not an American company, that were valued at $1 billion, that was sold at $1 billion valuation, with the revenue of $150 million. And this growth from 5 or 10 million to 150 million, it was a very big jump for him. But he had somewhat of an understanding of how to get there. And that's the moment, if you watched DuckTales, when Scrooge McDuck has those dollar signs running in his eyes. That was what I've seen in his eyes. And that's where the work started. We launched this line of business that would get them to this big goal, and they started to run very, very, very fast towards that goal. And as they started working faster than they were actually able to run, the things started to break. The marketing broke, we fixed the marketing, the production broke, we fixed the production, something else broke. Whenever we stretched the company, making it run faster, something broke, we fixed it and stretched it again, and something else broke. And that's what we were doing for a year. And at the end of this year, while they initially wanted to grow 50%, they actually did grow 5 times, which is quite a lot for this company in its state back then. What we did there then, we stretched the company so that it runs faster. Something broke. This was the main limitation. We focused on it and fixed it and stretched it again. Something else broke, and we did it for over and over and over again. That's how this thing works. That's what I will be talking, the core framework I will be talking about today. So my name is Eugene, and I'm helping entrepreneurs to grow their businesses since 2010, maybe 2009 or 8, something like that. I work with 1,000 companies, and I have a non-zero conversion to a unicorn. I want more. I want this conversion to be much higher, like 1% instead of 0.1%, but still it's non-zero. I've been part of a big accelerator where we developed this methodology, we call it growth tracking, that helps startups, first early stage startups, then later stages, big companies to grow. And I'm teaching this in growth tracking school since 2016. And I'll start by talking about 5 ways you can fail as a startup consultant, mentor, coach. I will use those words kind of interchangeably. I will mostly talk about mentors, but I will mean startup consultants, mentors, and coaches. I will talk a little bit about why I don't do that much of a distinction there. Those are not the only 5 ways you can fail as a startup consultant, mentor, or coach. There are more, but those are the 5 ways I hear from consultants, mentors, and coaches over and over and over again. And I'm talking to many of them, especially during over the last few months. And the first one, if you're a mentor, a startup mentor, you will probably not like that one very much, because the first way to fail is to work for free or for cheap. And if you are a mentor, you have seen something like this more than once. Many people believe that mentorship should be free. And startups have no money anyway, so why charge them? One way of thinking about this, one way of overcoming this belief is to make distinction between mentors who should work for free and coaches and consultants who don't work for free. But that's usually not the core thing. Whatever you name it, there are people, sometimes it's very early stage founders, pre-revenue, pre-investment, first-time founders who would only agree to be mentored by Mark Zuckerberg or Elon Musk. And if those two actually do the fight they have been announcing for some time now, those early stage pre-revenue first-time founders would only agree to be mentored by the winner. Hey, Mr. Z, you've lost to this guy, Elon. You're no good to be mentoring me now ever again. This is a joke, but still, this idea that I want to be mentored by some Elon Musk or Mark Zuckerberg type of guy is about prove to me that you're good enough to mentor me. Where's your $1 billion? And if you don't have $1 billion, then you're probably not good to mentor me. And that's an edge case, but I see many people, many very experienced, brilliant people who start questioning themselves. Am I good enough to mentor those first-time founders with my just 10 years of experience of a CEO of a startup or a company? And what happens then? This is a quote from one of the mentors I've been talking to some time ago. I, the mentor, follow up on them, not they follow up on me. The mentor starts chasing their mentees in order for them to do something about their business. This doesn't work. For the relationship to work, you need the client, the mentee, to be invested into this work with you. And the easiest way for them to be invested is to charge them reasonably, but so that it's a little bit painful. Because here's the thing I will be revisiting over and over again for some time today. The main problem in their business, the main bottleneck that doesn't allow them to grow, is usually somewhere they don't want to look, somewhere they're uncomfortable to do something, because that's the place they don't look to, where the problem is growing and growing and growing while they are doing something else. And as it grows, it becomes the most important, the biggest problem in their business. And if it's free for them, if they're not invested into this work, as they bump into some problems, into difficulties, they just don't do whatever they agreed with you they should do to their business. And it doesn't work. If you have to choose between free and cheap, free is still better. Don't work for cheap, work for free instead, because then you have a chance to use some other means to make them invested into this work. But still, if you can charge, it's the easiest way. The second way to fail is to give out everything on the first meeting. I hear from mentors that they get squeezed out on the first meeting, and then there's nothing. It doesn't continue. the founder, the entrepreneur, the client asks all their questions, get the answers, and they're good. They go on, they move on, probably to the next expert, to the next mentor, or just they go on their own. And that's it. I have seen one of the mentors, one of the partners of a very big top 5 accelerator in the United States in his mentorship calls with a couple of startups. That was awful. He was booked for like 4 meetings, pre-booked. And at the first meeting, the founders started asking their questions. He gave answers. That was good. For the second meeting, they didn't have that much questions. And for the third meeting, they didn't know what to ask. So I'm not sure about the third meeting, but they definitely skipped the fourth meeting. They had pre-booked with a mentor at the partner level of one of the top accelerators in the United States. You know the name of this guy probably. That's awful. But still, if you don't give out enough value on the first meeting, then there's also no continuation, nothing, no long-term relationship had. Because if they don't see a value, they don't continue working. Third one, sticking to your expertise. Many people, many consultants are quite all right with focusing on their expertise, and that's okay. I like that. I like that. But there are people who do some expert thing over and over again for years, and they get sick of it. But then when they try to talk to the founders about the bigger picture, about the whole business, about other areas of the business, what they get is, don't worry, we'll take care of that. Please tell us about your data science, marketing, sales, whatever it is. Another case, one student of mine, she's running a marketing agency for 7 or 8 years now. And one of her clients, she was working with with this guy for several years, but he doesn't let her into the business, into the entire business to see the numbers. She's running some part of marketing without knowing the sales figures. She's flying blind and still doing some marketing. Probably she already fired this client after taking my course, but for several years, the client didn't let her into the business, into the figures, into the numbers. And this is not a good idea to work in those circumstances, because once again, the problem is very often not where they think it is, but somewhere else, maybe outside of your area of expertise. For example, one case I heard from a mentor, or from one of the mentors, the marketing consultant generated leads, but the sales guy in the company didn't call any of them. The budget's over, everybody's frustrated, and the project's over. The client client spent the budget but didn't get sales. The marketing consultant did work but didn't get the next project. Nobody's happy. But the projects are not quite good as well. That's the fourth way. Because even if you found the problem, You find the problem, you show it to them, you fix it. And when you fix it, it's over. And it's okay. It's a good way of doing business, repeating over and over again a short, specific focused, in a specific focused way, the same expert gig. But still, it's expertise. And when it comes to the next problem, there comes a different expert. And when you do so, there's no time for you to work on marketing during the project. That's what I hear often. During the project, there's no time to work on marketing and sales because you're busy doing the project. And when it's over, you don't have the next project and you start doing your marketing and sales and wait until the next project with no money. And often this way you get to the low rates, to low prices, short projects, short contracts, or even the free one. And then the fifth one, my favorite, is to give advice. Advice works. If it's in your area of expertise, if they look up to you as an expert, and if they won't need to get out of their comfort zone to do whatever you advise them to do. What I hear from mentors is people don't take sound advice. That's a quote. You can advise a first-time founder that they should do customer interviews, and maybe they will even listen to you. Probably not, because it's not easy to do interviews, but maybe they will listen to you. But they don't have a lot of money to pay you, and they don't have a lot of chances, if they need this advice, they don't have a lot of chances to build a unicorn. The second point here is that the founder, they work on their business 24/7. You see this business for the first time, or you see this business for like an hour a week, 2 hours a week tops. How the hell do you know what they should do? How the hell can you advise them what to do? Another thing that was very interesting to me, as I heard it from one mentor, if you're an expert, you are used to people looking up to you in your area of expertise. But when you want to get out of this narrow area of expertise and work on the whole business, they don't look up to you. And what they hear is your opinion. There's not enough authority outside of your expertise. And you either get this, don't worry about that, or they start to argue with you, and you get into this situation of opinion versus opinion, which is, if you get there, you've already lost. So in order to get to bigger results, first of all, you have to look at the whole business. You have to see the big picture, and then you get out of routine work when you do the same thing over and over again. There's something new every time. You get bigger impact, big results in the business that you are working with and around this business in the world. And a lot of drive, meaningful change relationships, and the chance to build a unicorn, to work alongside the founder in building the next unicorn. I've been working with founders, helping founders since around 2010, when I made my exit. Formally, it was an exit, but the money in it was, well, I spent it in a few months. And even though we did our $1 million, I've been doing this, working as a CEO for some time, I didn't see it as a big success. And I didn't feel myself, I didn't feel fit for mentoring other people, other entrepreneurs. But the entrepreneurs started asking me for help. And it did help them. It did work. They did get value, and I liked it. I liked this work. But once again, mentorship should be free. And I've spent all the money by that time. So I started to look at other ways, not mentorship, but something else, that to make money out of working with founders and helping founders with their businesses. And at the time, I found a way that worked back then, works now. I don't do it for the last 10 years, but still back then it was pitch decks, because founders are willing to pay for creating pitch decks. You build a presentation for them, a spreadsheet with the financial model. They see a value in it. I did it for a couple of years, and I don't do it right now for the last 10 years. But still back then, I quickly realized that the value of it is not in the presentation or the spreadsheet, but in the transformation the business is going through over that time, during that work. Because the pitch deck is a way to diagnose a business. It's created for that, so that the investor can look at the pitch deck and see what problems are there in the business. So during the work on the pitch deck, and it took me a month or two with many companies, we find the problems, unproven assumptions, hypotheses that are still yet to be confirmed. We create a strategy, some form of a strategy, to overcome those problems and test those hypotheses. And the team makes the first step in executing this strategy. Actually, that's what accelerators do. They diagnose the business, they create some form of a strategy, they help the company to make the first steps in the strategy to make the business investable. So I took a few companies I've been working with at the time, and I declared them the first batch of my accelerator. Of those 4 companies, 2 didn't make it. 1 is still operational today, 10 years from this so-called batch. And 1 is the unicorn now. With this company, it's in Drive, it's a ride-hailing service. They're now second after Uber by the number of downloads. You probably didn't hear much about them, but they're big outside of the US. So with this company, we worked on their pitch deck, and then we continued working for many years. But I did not proceed with my own accelerator. Instead, I joined an accelerator that a very much bigger accelerator that my friends had started then. It was in Russia. It was the top startup accelerator in Russia. Many people called it Russian YC. And we did a few hundred startups per year, almost 100 in equity-based program and several hundred in equity-free programs, and several thousand companies overall. And that was quite a playground for us. We did create a methodology for helping startups grow. And today, most accelerators, like 90% of accelerators in Russia, startup accelerators, corporate accelerators, and many accelerators in neighboring companies like Ukraine, Belarus, Kazakhstan, and others, they use this methodology as a standard. we first worked with early stage startups, then later stages, then bigger businesses and corporations. And today, there are several thousand people that identify themselves with this methodology as their profession. The methodology is called growth tracking. Those people are called trackers, and several thousand people think of it as their profession. And I've been teaching it outside of this accelerator since 2016. About 1,000 people graduated from my course to this day. I love following the company throughout its life cycle, from the start to success in a good scenario. And I don't always get a chance to go with the founder throughout this process. With InDrive, we started at the start of the business, and we worked for 4 years until he's got his first big VC round, and then in 3 or 4 years he became a unicorn. With another company, I didn't have a chance to work with them at the beginning, but then at some point the founder approached me. He needed help on focusing on what's important, and we realized that the important thing at the moment was to work on the deal to sell the company. It's a complicated thing because you have to work on the sales funnel to sell the company. You have to keep the growth rate that you are actually selling, and you have to delegate the management to the team so that you can get out, actually exit when you sell it. And sometime later, it took a long time for him. It took almost a year and a half, but then he was in Forbes with an eight-figure exit. Another client of mine, we worked with him for 5 or 6 years. From the start of his business, a couple of years ago, he tried to sell this business, but it didn't work because the market conditions changed. So he turned it into a dividend business, delegated all the management, and now he's got his Porsche in the garage, and the rest of the money after the Porsche he's investing into an accelerator, and we are continuing to work with him on this accelerator. This work can last for years. This can be your main job if you want to do this mentoring or coaching entrepreneurs. If you want to do this your main activity, it may be your source of income, or it may be just a side gig when you, for example, if you're an entrepreneur and you want to look at how the other entrepreneurs do that, different ways to manage the business. You can be helping them and looking at how they do it. And that's not just about startups. This works quite well with anything, a dental clinic, IT outsourcing company, an agency, whatever business wants to grow, you can help them grow. For many people, this is the strategy they take with this type of work. I've been talking to this lady. She's running an accelerator in India, and I asked her to describe to me what are the kinds of mentors she's seeing in her work. And those two, she told me about 2 kinds of mentors. First ones are flirting with mentorship. They do it from time to time for fun. And the other kind are those who are serious about it. And of course, the founders get the most value from those who are serious about it. And so if you are getting serious about this work, it becomes some sort of a consulting practice. And consulting practice is usually when you sell your time for money. you can do it, you can scale it a little bit by the number of clients, then you can scale it by the price. You increase the price over and over again if you want to grow this practice. But both ways hit the limit. And then you either start building an agency, but that's a different type of work. That's a complex operational business, not fun for most people. Or you start working for equity as a board member, as a consultant working for equity, but you exchange your time for equity and not for money. Some people don't get there. Some people just start their next big business and stop doing this consulting work. But if you continue to do that, you work for equity, and then you remove the time out of it, and you start just investing your money for equity to get more money, and that's just an investment business. But anyway, this all starts with a consulting practice. And the consulting practice, to get there, this consulting practice should be high ticket and long-term relationships with clients, and high price, because low prices means low engagement. If they don't pay you enough, they don't do hard things, they don't get to big results. If it's low price and short-term engagement, you have to do lots of marketing and sales. And you start working on marketing and sales more than you work on actually helping the founders. It's a good business, but it's a different business model. It's more of an educational business, which is mostly the marketing. And the consulting business is high ticket, long-term, big picture, because once again, if you do work with a narrow expertise, it's projects, selling hours for time for money, or building an agency, and there's no path to working for equity. So high ticket, long-term, big results means you work with the whole business and you don't give advice. Instead of giving advice, you have to ask questions. And those should not be the questions like, don't you think you have to go do customer interviews? Because that doesn't work. It's not a question. If you ask a question like, have you done customer interviews? No, then you should do customer interviews. It won't work as well. No, I don't, and they stop answering you. What we really do usually to help the entrepreneur figure it out by themselves so that they will do something and not stop answering your calls is a longer sequence of questions. Here on the slide on the right, it's very simplified, and in the real world it's usually much longer. What's the problem with your sales funnel? We pitch, but they don't buy, they go away. Okay, tell me about one particular person who didn't buy, blah, blah, blah. Here's John. So what was the problem you were solving for John? I didn't think. That's the moment that you are aiming for. That's the moment you want, because at this point, the entrepreneur starts to think and figures out, oh, I didn't ask them about the problem. Maybe I should start asking them. Maybe I should do customer interviews. And then they decide themselves that they should do customer interviews. In this example, it's not about customer interviews, it's about anything. But still, if you can create this sequence of questions that will help the entrepreneur figure it out by themselves, then they have a chance to do something, to create some change in their business and to reach their goals. But if you have an alternative strategy for them, if you know what they should be doing, please, oh pretty please, don't talk to them about the strategy. Don't talk to them about what should they be doing. Don't talk about the solution, talk about the problem. To talk about the problem, you have to diagnose the business, find the problem, make sure they see it, like in the previous slide, and then wait for them to ask you for a solution. And only then you can pitch your alternative strategy, your solution, whatever. Because if you pitch a solution without a request, that's an opinion. And if you get in this opinion versus opinion mode, you've lost. You have to go back a few steps and start again asking questions about the problem. And to do that, you have to talk to them about the entire strategy, about the whole business. Because if they come to you with some problem and you just work on fixing that problem, that won't do them much good, because the problem is in the blind spot where they don't look, don't want to look, don't see, don't know to look, are afraid to do something, and so on. And to see that, you have to look at the entire business and the entire strategy. You start with goals, big goals, strategic goals. You work on their plan, you figure out, you ask them about their plan to get there. And you look at what are the problems that won't allow them to get there, to get to their big goal, by asking questions so that they realize the problem is a strategy, problems in the strategy, and then you fix those problems in the right order. Usually not starting with the one they came to you with. Even if you focus on your expertise, you are okay with working in your small, narrow expert niche. Still, the same thing works. They come to you for a solution that's a solution for a wrong problem, because the real problem is in the blind spot. For example, marketing generated leads for them and the sales didn't call them. The marketing consultant is frustrated. HR starts to hire the salespeople to fix this problem, but the product doesn't sell good because the value proposition, there's not enough value in this product, and therefore the sales process doesn't work. And so good candidates refuse to go there, and bad candidates get rejected by the client, and so the client is frustrated, and the HR consultant is frustrated. The client paid marketing to the marketing consultant, they paid to the HR consultant, everybody's unhappy, no result, because the real problem is in the product value. That's a very, very, very common example, especially with early stage startups. So you need to fix the things in the right order. You start in this first case with the product value, and only then you will get to some other, one of the next steps, you will get to some other problem that you are expert with, and then you do the project that they came to you for. And then there comes the next problem, and the next problem, next limitation. And the question here is, what if you don't know how to fix one of those problems? And the answer to this question is, it's okay. Nobody knows. In most cases, especially in startups, nobody knows how to fix this problem, because business is a journey through uncertainty. The only thing we can do is to figure out a set of hypotheses of how to solve the problem, and then quickly execute on those hypotheses. For example, if you don't know how to fix the problem, there's a lot of ways. They can hire someone, they can hire an expert, like a consultant, they can take a course and learn this by themselves, or they may have thought about it and they already know how to do that, or you can help them figure out some hacks so they don't need to do that at all. Those are hypotheses. Your job as a mentor, coach, whatever you call it, is to help them identify the most important problem, come up with hypotheses on how to fix it so that they execute those hypotheses and fix it. Because every business at every moment in time has exactly one main limitation on its way to growth. To grow, you need to focus on this one main limitation, main bottleneck, main constraint, and quickly test hypotheses on how to overcome it. The quicker you do that, the quicker you test hypotheses, the quicker you overcome those main limitations, those bottlenecks, the faster the company grows. If you did not read this book, The Goal by Ellie Goldratt, please do that. It's the most important book, business book published in the 20th century. It talks about the theory of constraints, this thing about where the main bottleneck and what to do to find it and to overcome it. For example, this is an example from 2 days ago. One student in my school, she's working with a small leasing company. They lease construction equipment to construction builders. And for some reason, I don't remember the details, they need to grow sales to survive. They need to grow by some amount, doesn't matter. And the founder is doing very important things. He's working on being compliant to some regulations, which is very important. It's a big risk. He's working on securing financing for his operations. But when they started to look at his sales funnel, what they found was, in order to get to the goals that they need to get to, they have to increase the amount of sales they do every month. And for that, they have enough leads, or they know where to get more leads. Then there's one sales guy who's not very much overworked, but he's starting to lose leads. But if they increase the amount of leads so that they can get to the big goal, he will definitely not be able to handle all of those. But if they hire 2 pre-sale managers, they will take some part of the work. 2 sales managers, pre-sales managers will be enough to handle the amount of leads they need, and the sales guy will also be able to handle all the work. The founder knows about this task. He knows that he needs to hire 2 pre-sale managers, but this task sits in a backlog somewhere. He will get to it later at some point in a couple of months, and it will be too late for them to get to their goal by the end of the year. He knows about it, but he doesn't see it as the main constraint on the way to his goals. And that's the most important thing for many, many, many businesses to help them grow. Help the founder, help the management find this main constraint. So here's the framework. We start with goals. We find this main limitation, main bottleneck, main constraint on the way to those goals. We focus on it, and we come up with a set of hypotheses on how to overcome it. And then we build a weekly sprint, a set of tasks aimed at those hypotheses to overcome this limitation to get to those goals. And the tracker is a person who helps the founder or the team do that work. They regularly meet, usually once a week, with the team or the founder. The tracker helps them find this main limitation, focus on it, form hypotheses in a weekly sprint, and then a week later, they come back and they look, did it work or didn't? Because if it didn't work, there probably is a deeper limitation that was the reason for it not working. And if it did work, the constraint, the limitation probably shifted somewhere else. And so they find this next one and focus on it. This process is continuing over and over and over again. You either continue working on the current limitation, find a deeper one, or find the next one. It starts with diagnostics. This is the first meeting where we go over goals, limitations, create a strategy and a short-term action plan, what to do right now. And then weekly, we call them traction meetings. Every week, we analyze the results. We focus on the next or a deeper or the same limitation, same main constraint, come up with a hypothesis and build a sprint, and continue this over and over every week. The diagnostic session, this first meeting, it consists of two parts. First one is the diagnostic cycle. The second one is the planning cycle, where in the diagnostic cycle, we go over the various problems we can find in the business. We compare them to the goals, and we identify a strategic gap where with those problems, you, the founder, will not be able to reach those goals you want to reach. And when the founder realizes this gap, we get to the next cycle, planning cycle, where we plan what will we do to overcome those problems and get to the goals. And this creates the plan itself and a request for help, because at every stage of this plan, the consultant, the coach, the tracker may show how they will help the founder. The first part, the diagnostic part, is going through different areas of the business. It may be product value, segmentation, marketing and sales channel, sales process, economics, financial constraints, and other modules, whether you have some specific expertise and you add your own module to that process, or something that's important in this particular business. And it's in growth tracking school, we have a 14 pages, I think, script to do that diagnostic process. Here's a very simplified form. It's a quick canvas to do that same thing, to do that same process. You start with goals, you identify the key problems, then you form the strategy to get to those goals, and you go over first steps, what to do now to overcome this first current main limitation. And all of those elements then help you create the offer. This is how you create the offer, because you combine all of it into explaining to the client, to the founder, what goal are they going to, and what will be your role in helping them get to those goals. This is a very simplified, not 14 pages, but just a couple pages canvas. If you want, you can drop us a note at this email address that will definitely magically appear right now in the chat if it didn't yet. And we'll send it. It's just an Excel spreadsheet. So the typical constraints that you will find during this process may be finding the product value, building the sales process, or some specific stage in your sales funnel, making economics profitable, or a specific metric in your unit economics, building the team, like hiring those 2 pre-sales managers, building the product, but this will be the real main constraint much, much less often than the founders would think it is. The infrastructure, like IT, finance, HR, not quite common, but sometimes it is. The management process may also contain constraints, and then you just scale. For a typical early stage startup, this may look something like that. A company goes through a sequence of those constraints. You start with interviews. That's an example. That's not always like that. You start with interviews, then you identify the target segment that you will be focusing at. You build the generation, you build the sales process, you turn your economics profitable, and then you just pump more traffic and see what breaks. Fix it, pump even more traffic, look what breaks. Fix it, and do this over and over again. This process of focusing on the main limitation, fixing it, and growing creates a lot of leverage for you as a consultant. First of all, the founder works with you on their big, ambitious goal, not some very narrow, small, little problem in their business, but on their big, ambitious goal, on building their unicorn or whatever they want to build. Then they have a strategy they believe in, that they created with you because you were asking questions to them. They create this strategy. Then all their effort and your effort is focused on the main problem, on the main limitation. And this makes all the team, the entire team, the business, much, much more efficient. Then it's continuous. It continues over and over again, because every time you fix a problem, you go to the next one, and every time you fail to fix a problem, you find a deeper one. And this helps you create high-ticket, long-term relationships with the founders, with the entrepreneurs, and bring them to big results. To do that, you need to know how to diagnose a business, how to form a strategy, how to find limitations, and you need to do that in key areas. First of all, in those key areas: product, marketing, sales, economics. Then there come other areas, but those are the most essentials. You have to know what questions to ask, what frameworks to use to help them find limitations and overcome the limitations. You need to know how to conduct those regular meetings, traction meetings, focus on the main constraint, form an action plan, and then analyze the results next week. And of course, you have to know how to sell this process as your service to founders. And believe it or not, that's what we teach in the growth tracking school. We teach diagnostics, we teach the growth tracking framework, we teach how to work with different areas of the business in this model: value propositions, customer interviews, segmentation, sales, unit economics. We teach a typical strategy to get from the idea to a scalable business. We teach the process, how to do the traction meetings, what's going on between them, and so on. And we teach how to sell growth tracking. This is a 2-month online course with pre-recorded lectures Several years ago, it was mostly lectures. It was 3 days offline. I'm talking from the stage. We don't do that anymore. I don't talk from the stage. The lectures are pre-recorded, and the real value is in group calls where we do the practice. You can bring in your businesses, your client businesses, your own business. You can describe the case without bringing in the business. You can just describe the case, and we'll be doing supervision. It's practice on the real cases, on real businesses. About a couple of hours of lectures per week, at first more than less, 2 to 4 hours of group calls per week, plus your regular work with your clients. The first goes the preparation week, where you have to find entrepreneurs you will be working with during the course. It's not selling. There will be a chance to sell to them later, but some students do sell right from the start, and they just make enough sales to they sell for much more than they paid for the course. Many of them, not everyone, of course. Then first week is diagnostics and growth tracking framework, goals, main constraint, hypothesis, sprint. Then weeks 2 to 5, we work on frameworks and tools for specific areas of the business, mostly aimed at early stage startups and later stage startups that have to build the sales, that have to build to turn economics profitable and so on, that have to build their process of delivering value. And then we go back to diagnostics, this time with all the frameworks and tools and knowledge you have to do it right this time. Then the regular process, and there we go a little bit into the psychology of this process. It's an important thing. And the last topic will be selling growth tracking, how to sell this as a service. And this course starts on September 28th, in 4 weeks from now. Here's the catch. This is the first batch I'm doing in English, because all the previous batches since 2016 were in Russian. I'm not in Russia, I live in Lisbon, but all of this work was done in Russia. 1,000 students, 7 years, 6 years, 7 years. But now that's the first English batch. It will be very small, up to 10 people, and some of the seats are already taken. And unlike the big course I'm doing in Russia, here I will be doing all the calls myself as a founder of this whole thing. That's important because in Russia, other people are doing most of those calls for me, and I just joined for the last 3 Q&A sessions. What you get from that? Get the methodology, how to work with founders and bring them to bigger results, accelerate them. You will build your own sales pipeline. There's no guarantee that you will make your first sales of this thing right from the start, but many students start selling during the course, or they raise their hourly rate 2 or 3 times during the course or shortly after. Obvious disclaimer, there's no magic pill. We are all different. Your starting conditions are very different. The work you do during the course may be very different, and so the results differ very much. But those results are very, very much possible. For a mentor, coach, consultant, this is the way to create high-ticket, long-term practice and bring them, the founders, to big results. If you are a consultant in a narrow niche, this will help you start working with the business as a whole on the CEO level and alongside the CEO or the founder. If you are building an accelerator, a venture studio, this will create a framework for you to do the acceleration, and this brings more results. This creates a better pipeline for you as well, because you employ diagnostics at the beginning, before the teams enter the program, and this improves the pipeline. For an investor, it's also a better deal flow. It is down to the valuation. Sometimes I invest in a company, part in cash, part in services, and this effectively creates a big discount, sometimes 75% discount for me to the valuation other people are investing at. And this helps you grow your portfolio. For an entrepreneur, it is a way to see how other people are working on their businesses and to learn from other people's mistakes and get paid for it. I like this one. You learn from their mistakes and they pay you for it. And if you are managing a business, it's a way to grow the business, to work with the whole business, the entire business, or with the teams within the business using this methodology. A few of the students' results from Russia again. Olga, from the November 22 batch, she made 4 sales at $5,000. It's not the precise number because it was in rubles. I don't remember the exact. The exchange rate is fluctuating, but still something like that. 5,000 per month per client in the first 2 weeks of the course. Pavel, he's running an educational business. He teaches kids finance or something like that, kids MBA. He made 3 sales at the start of the course, then 1 sale later in the course. He has a business to run, so he didn't have much more slots available, but I know that now he works with more companies because it's addictive. Alex, February 23, 50% revenue growth in his business during the course. People do come to the course with their businesses to work on their own businesses, and those businesses grow. Here is another story of Andrew. He's selling antifreeze, the liquid to wash the windshields for cars and other stuff. It doesn't sell quite well in the middle of the summer. So in July 2021, he sold for just $1,500. But in July 2022, during the course, he sold for over $50,000. This same thing that doesn't sell quite well in the middle of the summer. And in August, he sold for another 100,000. And then he sold this entire business because he figured out, he understood that this business won't grow as big as he wanted. And now he builds an accelerator for marketplace sellers. Once again, your results will be different. Your results will definitely be your results, not like those people, but something else, whatever you will do. But this thing costs $1,997 US. I know some people here are from Canada. Sorry, that's US dollars. But for the next 5 days until September the 5th, you get a 40% discount. and you can buy it just for $1,197. And here's the link. You can click on the link. It will magically appear in the chat. I think it did already. And there's a QR code and the link. And the course starts on September 28th. This 40% discount is valid until September 5th. So you just go click on that link, fill in the form, and you can pay by card there, or if you need to pay via a bank transfer, send us an email. And if you have questions, just send an email or ask those questions right now, or there's a button to ask the questions on the website. And this process of helping founders, of focusing founders on the main limitation and helping them quickly test hypotheses on how to overcome this limitation, will help you create your high-ticket long-term relationships with your clients, work with them at a founder level on the growth on their business, and bring them to big results, and learn from your clients, help them grow, create big results, impact, create lots of value for the entrepreneurs and their clients. So I hope very much to see you inside the course in a month, in 4 weeks. And if you have any questions, please ask them right now. We have the link in the chat, so I can probably stop the screen share. What do that? I don't know. Like that. And if you have any questions, please ask away. I see some questions in the chat. Replay, yes, we'll send the recording. Are there any questions? Does access to the materials and lectures end after 2 months? No. The access to lectures and to recordings of the calls is, we provide lifetime access, where lifetime means the lifetime of the course. While we pay for hosting, we provide access. This is, in Russia, that's 7 years now. We don't have plans to stop this, so it's for years. Okay. Can we get access to some demo of the recorded materials and sample contents? That's a good question. Most of the materials, most of the demo materials are in Russian. We are translating the course into English. I can, yes, but still we can give you access to some of the content that's already recorded. Please drop us an email to the address that's somewhere in the chat, I hope. hello@growthtracking.net. And we'll give you early access to part of this, part of the materials. What's the general approach to find clients? That's a good question. Thank you very much. There are more than two. First, if you have an existing consulting business, if you have an existing agency business, anything where you work with businesses, you can work with them. You can switch, that's called flipping the offer. When you talk to them about something in your related to your narrow expertise, you talk to them about the task that they come to you for. And then you start talking about the bigger picture. You do the diagnostics and you offer this work alongside with the project you were supposed to do for them. That's one. If you have existing business, you can sell to the pipeline in this business. Second one, accelerators, mentorship platforms, existing places where the founders already are. When you start working with this approach, when you start doing this type of diagnostics and offering them this type of work, you can charge them more than they expect to pay on those platforms, which are cheap. They pay you like, I don't know, $50 per hour, $100 per hour. But you can start working with founders for much bigger, with much bigger prices, because the value is bigger. You can just start talking with the founders in your own network, and that's actually what's working the best at the start. You start talking to them, you start building your portfolio, you start building cases, showing case studies, and then it starts to grow. That's usually the best way to start. And then if you know how to build the content funnels, if you know how to build webinar funnels and stuff like that, you can, of course, use that. But if it's not your expertise, if you are not very good at doing that, that's not the first thing to do. What stage is ideal for the growth tracking system, series A+ or C? First of all, it's stage agnostic and sector agnostic, because every business at every moment in time has one main limitation. Second, we started and for the first few years worked with very early stage businesses, from the idea, from pre-MVP to early growth. Then we started working with later growth, seed A+, stuff like that. The bigger the business, the more complex the process, because when the business grows over some size, you have to start dividing it into what we call management objects, and start working with those objects, which may be departments, products, whatever, teams. Start working with them as with separate teams, having their own goals, their own limitations, their own hypotheses and sprints, their own traction meetings. For you, if you are a consultant, that will allow you to increase your revenue, because you will charge for every team separately, for each team separately. So it works very well for pre-seed and seed if they have money to pay you, if you want to do it for money. If you're investing in them, that's just you invest in them and help them grow. And it works quite well. Sometimes I work with the CEO or a founder of a big company, and I myself or somebody else, other trackers, work with the teams within the company. This works very well for a bigger business. Did I answer all the questions? Are there any other questions you may want to ask? in the chat or here in the Zoom. Thank you very much. I think that would be it for today. If you have any other questions, drop. Oh, what does a typical sales cycle looks like time-wise? I usually sell on the first meeting, or they get out of this first meeting with a set of tasks for a sprint. Then they can come back. They didn't do what they wanted to do. We start digging into it, into finding out why. We find a deeper limitation. They understand how it works, and that's where they buy. And that's a week from the first meeting. If they don't buy at the second meeting, usually they don't buy at all. So the typical sales cycle, when they come to you for this long, the first meeting is 1 to 2 hours. 2 hours is better than 1 hour. So when they come, get to it, then it's it's about a week from there. If you want more details, more information, please drop us a note, write to me or to someone on the team on LinkedIn if we are connected. We can book a call with me or with somebody on the team so that you can get more information, ask you questions. We can, if you don't know how this will apply to your particular case, we can get deeper into your particular case and figure it out if it works for you or not, if it will work in your case, or whether it will work or not. So please send us an email or just go to the website at the link in the chat, and see you